What's going on, everyone, and I hope you're having a good day. Today I'm going to be teaching you all how to use liquidity, what liquidity is, and how to take profitable trades with liquidity. So the first question is, what is liquidity? So first I'm going to draw how the market moves, right? The market goes in ups and downs and then ups and downs, right? Up, down, goes like that. So let's pretend all these lines are just this price action right here, just simplified, right? So liquidity is when a high. This high is a liquidity. This high is liquidity. This high is liquidity. This high is liquidity. This high is liquidity, and this high is liquidity. This low is liquidity. This low is liquidity. This low is also liquidity. This low is also liquidity. This low is also liquidity. But what's important about, because there's going to be highs and lows in the market all the time. What's important is that liquidity, when it gets swept, so swept meaning it gets run through. So like for example, this high right here is liquidity, right? So we draw a line out there to mark out the liquidity. Once price goes and reaches in and sweeps the liquidity, we expect a reversal to happen. And this didn't just happen on the drawing. This happens in real time on the charts. But right now I'm just simplifying things for y'all. We will see examples on the real chart pretty soon. Liquidity sweep is a very strong indication of price reversing. But obviously it doesn't happen every time. Like for example, right here actually, this low got swept, right? It got run through, but it didn't reverse. So that's why we need to see confirmations. And one confirmation, when we see a liquidity sweep like this, there will be a break of structure. That's what it's called. That's our confirmation within the lower time frames in this area somewhere. And I haven't taught you all what a break of structure is yet. That will be in the next video. But just know there is confirmations that we're looking for, so we're not just blindly shorting the market, which means making money when it goes down. If this high or liquidity gets swept, we're not just randomly gonna at the top be like, oh yeah, let's press the sell button and short the market and make money when it goes down. No, we're gonna wait for a break of structure, which is our confirmation to happen, and then we're gonna short the market. Okay, same thing with longs, which is when you make money when it goes up. So this low right here is our liquidity. This low gets swept right here and big reversal happens. And within here somewhere there's a break of structure that we need to use for our confirmation. After we get that confirmation, we are allowed to take a long position, meaning we make money when it goes up. So that's the difference between longs and shorts. So now I hope that liquidity makes sense to you. I'm gonna go on the real charts and show you real examples of this happening on the chart. So these happen on every single time frame. These are all the time frames. They happen all the time. So for example, oh right here, I'll literally show you one right now. This is a high right here. Why? Because this blue candle is a move up, then a move down. And what does that create? Move up, move down. That creates a high right here. And a move down first, then a move up, creates a low right there, right? So that's the point. So this right here is a high. That's a high, right? The move up and the move down. That high gets swept right here on this candle, and then we see a big reversal happen right here. It's on the 5 minutes, so if I go down to the 1 minute, I will be able to see a break of structure happen. I can guarantee you there's a confirmation there on the lower time frame, but I'm not going to get into that because I haven't taught that yet. So just know liquidity sweeps are very important and very strong signs that a reversal is about to happen. And I'll show you more examples on the side here in case you think there's only one example and I'm just trying to lie to you all. Okay, so for example, look, this is a low right here, right? Because what? Move down. This black candle is a bearish candle. Move down, then a move up. That's a low. That low gets swept right here. And what happens? Boom. That's such a big move up. Look at all this whole move is a move up after this liquidity sweep. I'm telling you that this is one of the ways the market moves and it's very very efficient. And I'll show you all one more example before I get off because I don't want to make this too long because I think you guys get the idea. And if you don't, it's okay because a lot of people are confused on this usually. Just ask me all your questions in the comments and I will answer them. Another example is right here. This is a high right here because it's an up candle, then a down candle, so we mark that high out. This high gets swept right here, and then boom, look at this, we have a big reversal to the downside, right? That's literally all it is. That's what liquidity is, and that's how we have to use it. I use liquidity all the time to determine my daily bias to see which trades I'm taking, shorting or longing on the day, which is very important, but I'll go over that in another video. But that's exactly what liquidity is and how to use it. And yeah, see ya, bro. Thank you for watching.